I take a few days off making videos. What have you guys done to the markets, man? Holy cow. Big crash in crypto today. I want to explore the reasons why the crypto market has taken such a big hit today. What are the big stories that are affecting the markets as of today? Also, I want to dive into some reasons why I actually remain long-term bullish on crypto. These kinds of sell-offs are scary to the uninitiated. For those of us who have been around in the markets a bit longer, well, it's a Friday. What are you going to do? Also, I want to talk about the situation in China right now. A lot of things going on there that's definitely spooking global markets, and it just compounds on top of everything else that we're already seeing in global markets. So it's a big piece of the picture right now. I think it's worth discussing a bit more in depth. Also, of course, shout out to everyone joining this live. Of course, shout out to those of you listening on the podcast as well. If you're not listening on the podcast, you want to listen on the podcast in the future, you'll find a link for that in the description where you can listen on your way to work or whatever else you want to do. Okay, let's get into it. So the first thing, the big question on everyone's minds is what the heck just happened to the crypto markets, man? It's one of those days. You wake up, you refresh your app, and you go, oh my gosh, what just happened? Run over to Twitter, X, the X app, and find out what the heck is going on. Well, a lot is going on, and I want to start off by taking a quick look at some of the charts today. So first, the Bitcoin USD chart. Let's dive into that first. So this sell-off today did a few very interesting things. First, it broke the larger uptrend that we've actually seen Bitcoin be in for quite a while now. So this is the uptrend that really started back at the start of January. We saw, of course, our first point of that, the first higher low coming in on the 11th, 12th of March, bouncing higher from there. Our second one coming in around the 15th of June. Now we've actually lost that line, unfortunately. What's interesting now, though, is that this sell-off, well, pretty dramatic today. I mean, that daily candle was, one for the record books, perhaps. It's one of those savage daily candles that makes you go, holy cow, why do I invest in crypto, man? That daily candle today came all the way down to around $25,200. That's where it hit on most exchanges. Some exchanges did see it actually go lower. Some of the leverage trading exchanges, for example, because of the liquidation cascades that started happening, actually pushed under $25,000. But most of the big spot exchanges, we saw Bitcoin go down to around $25,200 or $25,300. Now, this is a key area for Bitcoin. So in spite of that uptrend break, the one positive thing that we can say at the moment is that we did see a bounce. How long that holds for remains to be seen. But we did see a bounce here from that previous key area of price support back on June 15th. Of course, there's also a key area of price resistance back in February. And of course, it's a very key area for Bitcoin overall. We can go even further back in history and find areas of time when that has been a very important area of price for Bitcoin. So that's nice to see, I think, in the short term. Two things I don't love, though, is the loss of the 200-day moving average and the 200-day exponential moving average. Actually, we're interestingly basically lined up perfectly together, which you don't see super often, but they were lined up perfectly there. And the lack of volatility basically brought them together, and we lost both of them at the same time. Ideally, we want to see a quick recovery back above those key moving averages. That's really like the key lines, bull bear lines, right? So I talk about a lot. The 200-day moving average is the bull bear line. 200-day EMA is kind of more of a reactive bull bear line, tends to give us an earlier warning signal, but now it has not because it's basically moving right along with the 200-day simple moving average. If you look down here at the RSI oversold on the daily. We got all the way down to 21. Now, historically, these kinds of strong oversold readings on the RSI tend to be days where it's a buying opportunity. Of course, that's not financial advice. Can't tell you what to do with your money, but that's what we see historically, right? Last time we had an oversold reading this bad was around the FTX collapse. Before that was mid-June 2022 around the Three Arrows Capital, Celsius, everything imploding, collapse. Before that was back in January 2022. So these kinds of readings, it's not definitive, it's just one indicator, the RSI, right? But when we see these kinds of strong oversold conditions on the RSI, historically has been a pretty good time to add to your stack. Just saying, guys, just saying. Also, if you zoom into the 4-hour here, you also see another strong oversold signal. In fact, this last time that we had this was all the way back in March. So it's been a while since we've seen this kind of a strong oversold signal on the 4-hour charts. Definitely on the daily, though, I think is much more important. So nice to see a bounce of 25K for now. Let's see what happens as we move into the weekend. And we have people generally less interested in markets at the weekend. Volumes tend to be a bit weaker at the weekend. And we've had such a brutal, well, Friday here for those of us just waking up to the new day. Of course, U.S. markets still have to go through their Friday and unwind all of the trauma that's currently going on in markets. Of course, crypto plays 24 hours a day. Stock markets can still be factoring in a bit of all this stuff tomorrow. Whether they look for a bounce or not will, I think, determine how we see the price play out over the weekend. Byzantine General here pointing out that this has been one of the biggest liquidation days we've seen in a long time for markets. In fact, this is the biggest liquidation day since the FTX blow up. Huge day, huge day. I think in total, this was not finished at the time that he posted this. In total, I think we saw almost $1 billion in liquidations today. Yo, guys. Play it safe out there. Play it safe out there. Leverage is a tool, but you got to use it as a tool. Don't use it as a, hey, let's just YOLO my life savings into something here and hope for the best. Low leverage probably wouldn't have even got liquidated on today. If you'd been on a 2 or 3x leverage position from 30K, you probably didn't even get liquidated on this move. So low leverage can save you and still help you maximize gains later on. Anyway, that's pretty crazy. Now what this does though, that has probably flushed the majority of leverage out of the system. And this is why we see price moves happen so fast in crypto, because $1 billion worth of leverage starting to deleverage starts happening within seconds and minutes. And we start a cascade that moves prices down very fast in a very dramatic way. And of course, it's September. It's September. And I know, actually not September yet, but I mean, it's August, which is generally not the best month, but September's coming up. That's the key thing here. This time in the markets tends to be a boringish time often anyway. You can see the average return by month here. So I'll read this out for you. January, 9.74%, February, 12.5%, March, 9.9%, April, 33.79%. Shout out to April, good month to be a trader. May 17.8, June 7.6, July 7.6, August 0.69, September minus 4.67, the only month for Bitcoin consistently in the red most of the time. October 25%, November 35%, December 10%. So what that means is that often we see August being pretty boring months. I mean, it makes sense. Northern Hemisphere summer, everyone's on holiday, everyone's having a good time. They're not looking at the charts. They're not trading Bitcoin. They're not buying Bitcoin. Everyone's on holiday. It kind of makes sense. September, people are still having late holidays. People are just coming back. They're getting back in the groove of work, all that stuff. The first thing on their mind is, I need to YOLO into some Bitcoin. So Septembers tend to be pretty rocky months. We're not even at September yet. Maybe this is already our pre-September warm-up here. But August tends to be a quiet month. September tends to be a red month. So the question I know a lot of people want to know the answer to is, well, okay, if September's a red month, then how much lower are we going to go? Look, nobody knows the answer for sure, right? But 25K so far, we've seen a bounce there. Obviously, we want to see that actually holding up strong, but we have lost key moving averages. The next major area of price support, though, is pretty far down at 20 grand. So that you really want to see hold. If we lose 20K, yo, what up? That's not going to be cool. That's not going to be cool. We start talking then about, well, retesting the lows. And to be clear, that happened in the last cycle. That happened in the last cycle, guys. We had our lows come in December 2018. We retested those lows in the COVID crash, very closely coming to a new low, but not quite. Of course, that was on a massive liquidation cascade once again. But with a lot of leverage out of the system, it'll be harder to move lower. Of course, leverage will reload. People will bring the leverage back in. We'll get new leverage added. Creates a new problem. But right now, without a lot of extra leverage, it's hard to push things lower dramatically. A lot of the people who've been holding their Bitcoin for a long time now, I mean, is this going to shake you? Is this the thing that shakes you finally? Probably not. Now, why are people freaking out right now? Well, there's a few different reasons in the market why people are losing their minds and selling their Bitcoin and getting liquidated. Story that's been floating around is that SpaceX, Elon Musk's one of his companies, sold $373 million worth of Bitcoin. This is from a Wall Street Journal report. A lot of people didn't even know that SpaceX had Bitcoin until today. I think we covered this year and a half, 2 years ago or something like that. Tesla's, of course, the one that really got the big attention because Tesla's a publicly traded company. SpaceX is a privately traded company. So that's a bit of a difference there. But the report by the Wall Street Journal, as Watcher Guru points out here, is unclear and states SpaceX wrote down the value of Bitcoin it owns by a total of $373 million last year, and in 2021 has sold the cryptocurrency. So it's a bit of one of those stories that starts people panicking. I mean, you have to keep in mind, if this sale did happen, then it happened a while ago. It's just being re-reported now by the media or being reported by the media now. It's a big nothing burger. It really doesn't matter. It's not a massively consequential amount of Bitcoin. It doesn't matter if SpaceX holds Bitcoin or not. It really doesn't. And if you're selling your Bitcoin because SpaceX sold their Bitcoin, seek help. I don't know, man. I don't know. It's like, that's not a reason to sell your Bitcoin, in my opinion, of course. That's not why I wouldn't sell my Bitcoin because SpaceX sold their Bitcoin. I'm sure somebody has. The big thing, though, it's really spooking markets, obviously, is the Evergrande story. And there's a few other factors here we're going to discuss too, but China's Evergrande seeks Chapter 15 protection in Manhattan Bankruptcy Court. Evergrande finally went bankrupt. Now, we have been talking about the Evergrande story for quite a long time here. It's been going on for, 2 years now? Evergrande is a massive Chinese property developer that has basically been on the ropes for a very, very long time. China's Evergrande, which is the world's most heavily indebted property developer, became a poster child for China's property crisis. Yeah. They've been the sick man of China for a while now. Seeing them collapse is actually probably a good thing in the long run. Pull that Band-Aid off. Now no one has to worry about Evergrande collapsing. And look, I think there's been already a lot of deleveraging away from Evergrande. A lot of funds have got money out. The Chinese government stepped in to probably mitigate the eventual collapse's impacts as much as possible. Still, these are the kind of headlines that spook markets. These are the kind of headlines that freak markets out. Oh my gosh, a massive Chinese property developer has collapsed. The end of China is here. Can't wait. We're going to all start making those videos pretty soon, guys. The end of China is here. 24 days until China collapses. Evergrande, the new Lehman Brothers. You guys know the headlines. It's done, though. And that, I think, is a big factor. It spooked the markets today. So, in the end, I think not that massive of a deal. Yeah, it's a massive Chinese property developer. Yes, the Chinese property market's got a lot of problems, obviously. But it's done now. Markets can consume that information and move on. Also, of course, this hasn't been helping us because look, the last 2 months for Bitcoin have been super boring. Nothing's been happening. We've been super low volatility. And as I've been saying, with this low volatility and the Bollinger Bands being super low, it indicates that a big move was coming. A big move did come. And like I was saying, it doesn't indicate up or down. It just indicates that we're in a period of super low volatility. In fact, we were at historically low volatility before this happened. Well, we got the volatility. Bitcoin's not boring anymore. It's just not the volatility we wanted. And it was tough, because we had all this good news coming, essentially some good news coming through, and it didn't really push markets higher. And when good news isn't pushing markets higher, it's kind of a time to take stock and say, that's not awesome, is it? Of course, these kind of sell-offs do provide buying opportunities for the savvy investor. So let me know in the comment section, of course, have you been buying the dip today? Curious to hear your thoughts. And if you have been pulling the trigger on any buys, and if so, what have you been buying? Now, as expected, we also got the delay from the SEC on the Bitcoin ETF. This was the ARK Invest Bitcoin ETF. Everybody was basically expecting that, yeah, this is going to be delayed. So there was not really any big surprises here. The next big thing we're looking at are the next deadlines. The next deadlines for ETF products. So coming up September 1st, 2nd, and 4th, we have a whole slew of Bitcoin ETFs, including BlackRock's Bitcoin ETF, Fidelity's Bitcoin ETF, Bitwise's Bitcoin ETF, Invesco's Bitcoin ETF. All of these guys are coming up for, their first deadline. And I don't imagine much is going to change in the 2 weeks between ARK and BlackRock, unless, of course, it's simply the case that the SEC wants to approve BlackRock first. Then they might delay them. But I expect probably we're going to see a pushback second, third, or even to the final deadline. The SEC may drag their feet as long as possible, unless, of course, they lose the grayscale lawsuit, at which point their hand might be forced to start approving these Bitcoin ETF products. We'll see how that goes. And of course, I like that Bitcoin Archive points out here the hypocrisy of the SEC. They approved a Bitcoin futures ETF. They approved Bitcoin leveraged ETFs. They approved Bitcoin short ETFs. And the pricing data that is sourced from Coinbase and other major exchanges, by the way, is adequate for all of that. But it is inadequate for a spot Bitcoin ETF. There's too much manipulation and fraud in the cryptocurrency industry with the price of Bitcoin to approve a spot Bitcoin ETF, but there's not too much of that to approve a futures, leveraged, and short ETF. Does it make any sense to anybody? No, of course it doesn't. Of course it doesn't. By the way, if you are a trader, you need yourself an account over on BYBIT. It is the best place for trading cryptos. Whether you want to do futures trading, use low leverage, of course, or if you want to do spot market trading on their wildly popular spot altcoin markets, or you want to do copy trading, outsource trading to somebody else, you can do that on BYBIT. Use the link down below. You'll get exclusive fee discounts as well as exclusive trading bonuses and deposit bonuses up to $30,000. So check it out if you are a trader. Now, what are some other things freaking the markets out right now? Well, bonds are flashing a warning sign. The bond markets are going a bit nuts right now, especially if the Fed raises interest rates more. So this is a real situation right now. It's got the global markets freaking out a bit because the Japanese bond market is heading up. The Japanese yen's heading up. The Japanese central bank might do a big sell-off of U.S. treasuries. U.S. bond markets are seeing their yields rise too fast. It's freaking markets out, man. Long story short, this is the kind of, and bond market's massive market. It was $150 trillion global market. As Michael Gayad points out here, here's the 10-year treasury yield in 1987. Got up over 10%. It peaked on October 16th, 1987. Black Monday, when the stock market fell 22% in a single day, was October 19th. Spiking yields led to a stock market crash. Spiking yields essentially equal a bond market crash. So the bond market definitely causing a lot of concern right now. And it's adding to the fear, adding to the buffet of fear that we have to dine on right now in markets. Everything which is affecting the crypto markets. the Fed minutes from their meeting came out also. So Fed officials are divided in July over the need for more rate hikes. Participants remained resolute in their commitment to bring inflation down to the 2% objective. The minutes said of a meeting in which policymakers on the Federal Open Market Committee unanimously agreed to raise the benchmark overnight to up 0.25%. Most participants continued to see significant upside risks to inflation, which could require further tightening of monetary policy. Let me read between the lines here for you. They may raise longer than expected, higher than expected. At least that's what they're telegraphing now. And it could be psyops from the Fed. They've already stated they're probably going to raise one more time. Another 0.25% raise is on the table, especially with inflation going from 3 to 3.2% this month. So let's not get excited if that happens, but the markets will not like that because this just creates all kinds of chaos once again for the bond markets, for the equity markets. Hold on to your butts. And of course, US stock markets are slipping after Fed minutes show officials split over the rate hike. So stock markets are freaking out over this to an extent. And of course, we don't rally to new all-time highs like Apple or Nvidia or other stocks did. We did see some nice moves in crypto and some nice on-chain gains, obviously. But here you go. You see US stocks got some new highs this year. Crypto, not even close. We didn't follow them all the way up, but we are going to follow them down. We're correlating again, baby. Yeah. This is not the correlation you were looking for, man. Ay. As the Rational Root points out, we are now in a reaccumulation mode for Bitcoin. All of this sounds pretty dramatic until you realize that actually we're just kind of in a reaccumulation mode, which is cool. But that reaccumulation mode can last a while, and there can be a lot of price variation in a reaccumulation period. So just, moderate your expectations on what crypto is going to do before the Bitcoin halving. Rect Capital here pointing out as well, let's not forget that we are in a new macro uptrend. Yes, there'll be corrections, but over time, the macro uptrend will take BTC to a new all-time high. To put it in perspective, we've dropped from 30K down to 25K. It's a bit dramatic. It's not that crazy for crypto. I think it's probably feeling even more dramatic because nothing's happened for like the last 2 months. And I know there's a big, scary macro backdrop going on here. I get that. I'm very in tune with the reality of what is going on here in the background. I know it's been crazy, guys. I know crypto is a market that continually challenges you. This shit ain't easy. Don't let anybody tell you this is easy. It's tough in crypto. It's tough in any market. Investing's hard because it continually psychologically challenges you. But I remain focused on the big picture, on where we are going in the long term. This day-to-day noise, what's going to happen by the end of the year, it's not super concerning for me. I'm thinking, what's going to happen in 2024, 2025, 2026, heck, by 2030? 2030. It's a long time away, but it's actually not that far away. Where can your portfolio be? Where can your wealth be by 2030? If you're paying attention, if you're dialed in, if you're making the right decisions, thinking long term, not getting shaken out by all the fear in the markets, deploying capital when necessary, obviously, when the fear is high. Those are the people that tend to make it long term. Now, I want to dive in a little more to this idea of things to actually long-term remain bullish on. Because I know that sell-offs like we've seen this week can be really scary. And I know there's a lot of new people in the market right now, in spite of how markets have been. If you're new to the market, shout out to you. Welcome to the market. If you're an old hand in the market, this stuff just gets tiring, man. It does. But there's a lot of reasons that I remain the ever optimist in these markets. And that doesn't mean that I am blind to risk. It doesn't mean that I ignore the realities of the macro situation and the risks in the market, the potentials for like a credit event or something like that, which deserves a whole video of itself coming in the future. But long term, I'm not betting against technological innovation. I feel like that's a losing bet. So here are some things happening in the cryptocurrency market that I think are very bullish for the space as a whole, and which are not necessarily fully priced into, well, a $25,000 or a $26,000 Bitcoin, as we've seen this week. Or if we get down to $20,000, I don't think that's priced into a $20,000 Bitcoin. The first of these, of course, is PayPal. As Jamie Coots points out here, PayPal's announcement is not priced in. I would tend to agree. PayPal has 435 million active accounts. Ethereum, layer 1 and layer 2 active addresses, 1 million. That's 435 times bigger, the PayPal user base. If 1% convert a balance over to PYUSD, the new PayPal stablecoin, and begin to use it, then the ramifications for the Ethereum ecosystem and for ETH, the asset, are absolutely massive. And I tend to agree. PayPal alone could 4x the user base with just 1% adoption, which is not a big hurdle to overcome, in my opinion. It doesn't happen overnight, to be clear. It might take a while, but that is massive. The potential of this is massive. We're talking about hundreds of millions of new people that are getting crypto wallets and crypto accounts thanks to PayPal, one of the biggest fintech companies in the world. That's not priced in. Come on, guys. That's not priced in. Also, crypto wallet provider Ledger set to let users buy Bitcoin and Ether through their PayPal accounts. So how many tens of millions of people have Ledger wallets? A lot. And it just got easier for those people who are already into crypto, to buy more crypto. Imagine how nice that is. Now you can just send crypto straight to your Ledger wallet from your PayPal account. That's pretty cool. That removes a big problem that a lot of users have in terms of, I got to go open an account on Coinbase or BINANCE or whatever and send money over. It's going to take a week to get there and, all that crap, right? It's cool. As Saigar points out, Visa, one of the world's largest payment processors, continues to use Ethereum for their crypto research. Yesterday, they published a proof of concept that allows users to pay gas fees using credit cards by leveraging account abstraction. Now, account abstraction is huge, and we're seeing a lot of developers' energy being put into this right now. Account abstraction essentially allows for you to be able to use crypto without doing all the sort of behind the scenes stuff. The crypto experience now is kind of like using the old school commands on a computer where you have to, have you guys used this before where you turn your computer? I don't even remember how to do it anymore. I haven't done it in such a gosh darn long time. Remember back in the 90s when I was a kid, this is how you had to load programs on your computer. You'd stick your big old flat floppy disk thing in there and you'd type in your command, command play or whatever it was going to be, and then it would load that program up. Very basic, very, very basic stuff. Well, that's where we are with crypto adoption right now. We're at the very, very basic level. And look, we're getting better. We're getting a lot of great wallets coming out, and we're getting a lot of other positive developments happening, but account abstraction is going to be a big step towards mainstreaming people into crypto. Because right now, the user experience leaves a lot to be desired. Yeah. And account abstraction is going to do it. And guess who's working on it? Just Visa, guys. Come on. One of the world's biggest payment processing companies in the world, working on Ethereum, working with USDC, all about not getting blockbustered. Hundreds of millions of users. Visa probably has 1 billion users globally. Big stuff. Ripple, XRP, not priced in either. The reality that so far, XRP has been deemed to not be a security. Now, apparently, the judge has just approved the SEC the right to appeal the ruling, but that could take like 2 years to play out in court. Until that time, basically all altcoins will be not securities. Or the SEC is going to have a very hard time trying to enforce that when, well, they're just going to look back and go, but XRP, but XRP, but XRP. So that gives us enough space for, well, an epic altcoin bull run. Not today, obviously. Maybe not for the next 6 months. Maybe not for 2 years. But it's coming. Right. Then there's the X app. So Elon Musk's X app seeks data partner to build trading service on their app. Now, we've already seen the Elon's interest in Bitcoin, Elon's interest in Dogecoin. Yeah, okay, SpaceX sold their Bitcoin. Who cares? Elon's a businessman. He's going to look at, okay, crypto's popular. Let's put Dogecoin in. Let's put stable coins in. We're going to have the big payments app on X. Crypto's going to be a part of that. That's another 400 million users potentially. It's big stuff. It's big stuff. Now, before we get into a few of the other things to remain bullish on, if you're not signed up to the Wealth Mastery newsletter yet, you got to check it out. It is the best newsletter in the cryptocurrency industry. Slightly biased because obviously it's my newsletter, but it really is just packed full of juicy alpha in every single freaking issue. We talk about altcoins, altcoin alpha, DeFi, NFTs, trending news, altcoin reports, technical analysis, and much more. You can get that straight to your inbox 3 times per week, and it's free. Sign up using the link down below in the description and join 75,000 weekly readers, getting the latest and best information to your inbox. Now, Bitcoin spot ETFs. This is not fully priced in. You know, right now, we are basically back to like almost, well, not quite, but we're getting back down to the price of around where we were. Well, actually, basically there, back down to the price of where we were when BlackRock announced their Bitcoin ETF play. So we were all so excited and bullish when BlackRock announced, hey, we're going to go after Bitcoin ETF. And we've discussed at great length that, yeah, Bitcoin ETF is going to happen. BlackRock is going to get their Bitcoin ETF. It's simply a matter of time. And yet the price is back down to where it was when BlackRock announced. Have we all forgotten that BlackRock, one of the biggest asset managers in the world, is going to get a Bitcoin ETF approved? Sources, rumors are saying it's a question of when it gets approved, not if it gets approved. It's coming. And when it comes, all the other Bitcoin ETFs are also going to get approved. The Ark, the Fidelity, the Invesco, the Bitwise. Estimates are that this could bring $20 to $30 billion of new ka-ching cash into the cryptocurrency market, chasing after Bitcoin in particular, buying Bitcoin ETF products. Now, I'm not a math doctor, but $30 billion in buy pressure for Bitcoin, that's a lot of cheddar, man. That buys almost half of all the Bitcoin currently sitting on exchanges. Of course, not perfectly, because once you start chasing that Bitcoin, prices start going up, et cetera, but we're talking huge price impact here. This is not priced into the market. In fact, it's still not priced into the market. We're literally back to like the same price that the price of Bitcoin was at before BlackRock even freaking announced, man. You can't tell me that's priced into the market. You can't tell me $30 billion in buy pressure is priced into the market, because it's not. It's not. Now, another interesting factor, probably not priced into the markets fully. Money market fund assets hit a new record high of $5.53 trillion this week. That means there is an incredible amount of money currently sitting on the sidelines that all it needs is a spark to come back in. Now, they're chasing high yields from U.S. treasuries and stuff like that, right? I get it. It's attractive right now. Just put your money in cash, stick it somewhere safe-ish, and hey, rock and roll. But once markets move to a stronger risk-on attitude. It's interesting that all of this recent bullish action in the markets was not enough to entice a big portion of that money out. But once we see a stronger risk-on attitude come back into the markets, we're going to see a lot of that money get out of these money market funds and ape into tech stocks, a little bit into Bitcoin, crypto, all that stuff. But the tech stock rally is, to an extent, the tide that lifts all boats when it comes to technological innovation stuff like crypto. Interesting as well, BitPain points this out. I'm not surprised that corporate treasury adoption has been slow. I didn't expect the entire NASDAQ would cannonball into Bitcoin deep end like Saylor did, but I'm continually shocked that essentially nobody anywhere on Wall Street has seen these numbers and thought maybe, just maybe, we should dip our toes into that sweet, sweet orange water. And of course, he's talking about this. This is a chart shared by Michael Saylor. So 3 years ago today, Michael Saylor says, MicroStrategy announced that it had adopted Bitcoin as its primary treasury reserve asset, purchasing 21,454 Bitcoin, or $11,653 per Bitcoin. Of course, their average price now, they've been buying crazy amounts all over the place, around $29,000. So MicroStrategy's back in the red. But at the time he posted this, had they invested that money, $250 million into silver, they would have been down almost 20%. Had they invested into bonds, they would have been down almost 18%. Had they invested in gold, they would have been down 5%. Had they invested it in the NASDAQ, a NASDAQ index fund, they would be up 25%. Had they invested in the S&P 500, they'd be up 33%. Had they invested it just into Bitcoin, 145%. Of course, MicroStrategy stocks up 206% in that time. Can't do both, though. So their Bitcoin play is up 145% at the time they posted this. So maybe it's up 130% or something. That first buy, again, their total average purchase price right now, they're slightly below by a few $1,000s. But Michael Saylor's not selling anytime soon. They just said they're going to raise $750 million more dollars and buy more Bitcoin. Now, not all $750 million is going to Bitcoin, but I bet 500 million is. That's going to buy a lot more Bitcoin. And as BitPain pointed out, like, how has no one else on Wall Street seen this and go like, holy cow, maybe we should get some Bitcoin too. Maybe, just maybe. And that's where the Bitcoin ETF comes in. Because a lot of these companies are simply scared. They don't want to custody themselves. They're worried about the regulations. They're worried about tax implications and all this stuff. But when they can just go buy a Bitcoin ETF, I think the demand is there. The demand is just scared to buy Bitcoin directly. Michael Saylor's front running them because he's brave enough to go out and say, let's buy the Bitcoin, stick it on my ledger. Imagine having $4 billion of the Bitcoin on one ledger. I'm sure it's not, but just that'd be funny, wouldn't it? Loses the password one day. Thank you for your sacrifice, Michael. No. It's going to come. The demand is there. Remember, $20 to $30 billion of new demand for Bitcoin once a Bitcoin ETF is approved. It might be 4 to 6 months. Can you wait? Are you patient? And then the big catalyst, the Bitcoin halving. 252 days. Tick tock, tick tock. It's coming. It's coming. It's coming. And I'm excited about it personally. Bitcoin halving historically has been a very bullish event for the entire cryptocurrency market. Historically, we haven't hit new all-time highs for Bitcoin before a Bitcoin halving. We only hit it after. So can you survive? Can you make it? Can you think long-term? Can you look at some of the big catalysts that are coming? This is what I do. Can't tell you what to do with your money. Obviously not financial advice. But I look at what's coming. I look at the users that are going to be onboarded. I look at the money that's going to come into the market. I look at the big stories that are actually going to affect on a fundamental level where this asset class is going. Long-term, I remain bullish. Short-term, we could see all kinds of malarkey happening in this market. So stay frosty, guys. Now, let's talk about China. You see, China is collapsing again. It's actually quite funny. One day China's collapsing. Tomorrow, China's the rising superpower that has to be countered. Get your propaganda straight, guys. Come on. But China is having a bit of a trouble at the moment, if you will. Of course, the Evergrande collapse is just a part of that story. But China is entering into deflation, and that could have effects for everybody. So let's talk about it. So this BBC article points out some pretty interesting stuff. Let me read you a few parts of this. China's economy has slipped into deflation as consumer prices declined in July for the first time in more than 2 years. The official consumer price index, a measure of inflation, fell by 0.3% last month from a year earlier. Analysts said this is pressure on the government to revive demand in the world's second largest economy. This follows weak import-export data, which raised questions about the pace of China's post-pandemic recovery. The country's also tackling ballooning local government debt and challenges in the housing market, youth unemployment at record high, et cetera, et cetera. So why is deflation a problem? China produces a large portion of the goods sold around the world. A potential positive impact of an extended period of deflation in China may be that it helps to curb rising prices in other parts of the world, such as the UK. However, if cut-price Chinese goods flood global markets, it could have a negative impact on manufacturers in other countries. That could be problematic because it could hit investment by businesses and squeeze employment. Remember, what happens in China has echoes around the world, good and bad, right? A period of falling prices in China could also hit company profits and consumer spending. This may then lead to higher unemployment. It could result in a fall in demand from the country, the world's largest marketplace, which is also a very big problem because that affects energy markets, that affects raw material markets, that affects food markets, that affects a lot of markets. That could hit global exports big. What's that mean for China's economy? China's economy is already facing other hurdles, recovering from the pandemic, et cetera, et cetera. China is also dealing with the property market crisis, the Evergrande story, of course, and a lot of other things. So this deflationary pressure coming in China is a big deal and does have a lot of investors worried right now. The Evergrande story is just the tip of the iceberg when it comes to the Chinese property market insanity. We're seeing a lot of crazy stuff happening in Chinese markets right now. Deflationary pressures, pressure on the yuan, political pressure, pressure from the United States over Taiwan. A lot of stuff going on here. A lot of stuff going on here. As Sophia Costa points out here, China's property slump looks far worse than official data suggests, which is something that we see as a common thread from China, where official data says one thing, real data may be a bit of another. Since the peak of 2021, home prices are down at least 15% in prime areas of Shanghai and Shenzhen, about 25% near Alibaba's HQ in Hangzhou. Chinese property markets are nuts because so much of Chinese personal wealth is in property. So seeing massive corrections in the property market puts a lot of pressure on anybody who has mortgages, but it also puts a lot of pressure on household wealth. Remember this idea of the wealth effect, right? So when the value of your property goes up, you feel richer. So you have an investment property, you bought it for $1 million, now worth $1.5 million. You go out and buy some stuff. I'm rich, baby. I got an extra $500,000. You start spending those unrealized gains, you buy a new car, you buy something nice for the missus, et cetera, et cetera. Then your property price comes down back to $1 million, and suddenly you don't have the extra $500,000 of equity anymore, but now you got all the stuff you got to pay the bills on. It's problematic what's happening in the Chinese property markets right now. Also, it's going beyond property markets. So Chinese asset manager signals debt overhaul, stokes contagion fears. And this is what you start getting worried about. When you see all these things starting to happen, you start to worry that it's going to spread. So a company called Zhongji Enterprises, which I've never heard of before today, but they are apparently a $137 billion asset manager in China. Well, they're in a bit of trouble. They're talking about restructuring in a recent investor meeting. Yikes. So that's problematic. That's very problematic. Of course, they have exposure to the country's real estate sector. So we could see major asset managers going down in China. The Chinese property market continues to capitulate. It creates real problems. As Gareth Soloway points out here, shares some interesting data. Second largest economy, China is in deep trouble. Retail sales missed 2.5% versus 4.5% expected. Industrial production missed 3.7% versus expected 4.4%. Fixed asset investing missed 3.4 versus 3.8 expected. Remember, when China reports numbers, economists assume they are far worse than those that are actually reported, so things are not good in China. In addition, China stopped reporting youth unemployment numbers, which are estimated to be about 20%, which is crushing number here. China's central bank just cut interest rates as well in a surprise move from 2.6 down to 2.5%. China is trying desperately to spark the engine. They're there. They got their ether out, man. They're spraying it in there. Trying to get going, pulling the chain, like, come on, engine, restart, China. Come on, let's get it going. It's not working yet. That means, and I agree with Gareth here, China is going to have to start printing even more. Because what is the solution that governments always run to when they get into trouble? Print more money. Not every government can do it. China can do it. China will do it. Remember, Chinese money printing is what led us out of the bottom back in November 2022. China's money printing has been a big factor of markets this year. China will need to print. China will need to print bigly. It's coming. Guys. Now, before we get into the rest of the China story here, just a quick note. If you are looking for the next big things in the altcoin market, well, you need to have the skill set to find those next big things. That's why I made the course, Mastering Altcoin Investing. This course is designed to help you with the altcoin basics, of course, but also how to understand the fundamental, technical, and philosophical concepts behind altcoins. Also, how to get into token sales, how to find airdrops, different approaches to investing, strategies on how and why to buy and to sell, looking at market cycles, trader psychology, how to take profits, how to pay your taxes, all that kind of stuff. This is the course that I wish I'd had when I started altcoin investing. Look, in these current market conditions, altcoin investors who can find the gems are going to be the ones cashing out for millions 2024, 2025. Not financial advice course, but check out the course, link down below in the description. It's an awesome course. You'll love it. Go check it out. Okay. Here's Kathy Wood weighing in on the deflation situation. Kathy says, China is exporting deflation in a more profound way than I believe in many economists and strategists can appreciate. All else equal, that a 15% depreciation in the yuan relative to the dollar in the last year should have increased its PPI inflation rate by 15%. Instead, it has dropped by 4%. In other words, the deflationary vortex emanating from China is approaching 20%, 15 plus 4%, highlighted by the burgeoning defaults in Chinese real estate and trust companies. After it entered the World Trade Organization in 2001, China's real GDP grew at a double-digit rate for nearly 20 years. Rapid growth can cover many economic sins, typically excessive debt and associated leverage. Those excesses are surfacing in China right now. China probably wants to limit, if not stop, the depreciation of the Chinese yuan. To do so, it could be selling US dollars and buying yuan, effectively tightening its monetary policy and exacerbating the economy's weakness even as it is easing. She said, in our view, the view of ARK Invest, the Fed has precipitated and exacerbated the risk of a global deflationary bust. The impact of its record-breaking 22-fold increase in the Fed funds rate could be hitting China first and spreading to the rest of the world. The dollar is once again proving itself to be a beast and a powerful, powerful weapon. Perhaps, tinfoil hat, perhaps the raising of these interest rates, the breaking of the banks, you losing your job, slow down US, all this stuff was just a byproduct of them going after China. Knowing that raising the rates would put a lot of pressure, interesting thought, would not surprise me. Lisa Abramovich pointing out, that Citi's Johanna Chow says China is headed toward Japanification based on policy responses so far, which look too restrained compared with Japan in the mid-1990s. China's future growth prospects may be decelerating more sharply without growing, enhancing structural reforms. Yikes. Yikes. That is not what you, well, for China, a yikes, obviously, because what happened to Japan? Japan stagnated for decades. China does not want to go down the same path. It wants to continue going up. It needs to make some big changes. It needs to print. It needs to print. And when China prints, we all eat, baby. That's what happens. Hedge funds, of course, foreseeing the Evergrande collapse, started dumping Chinese stocks aggressively, which brought Chinese markets down. The Shanghai Composite Index was down, along with, of course, global equities in the last week. Crypto markets, of course, ouchies today. But hedge funds were getting out of Chinese stocks. In fact, it got so bad that China ordered funds and banks, stop selling your stocks, damn it. Cool and normal, China. Hey, when the going gets tough, just tell people not to sell their damn stocks. Markets can't go down if you guys just stop selling. That's one way to do it. And hey, we can laugh at China for doing that, but come on, plenty of other countries have done that too. Plenty of times where we've seen them saying, guys, could you just stop selling stocks, please? That'd be great. Why is it always the same people causing the same? Always China out here causing problems. And just print the money, guys. Just print the money, China. You'll solve all your problems. Just let the printing into your life. That's all you need to do. Okay, let's open up the door to some questions, guys. Let me know your questions in the comment section. I'll stick around for 10 minutes or so, answer a few quick questions for you guys, and then give my voice a rest. As you can probably hear, I've been a bit under the weather this week. Well, I didn't have any streams on Monday and Wednesday this week. Got whacked down by a pretty gnarly cold, man. But yeah, let me know whatever questions you guys might have. I'll try and answer 6, 7, 8 of them or something like that, and then we'll call it quits for today on the stream. But of course, before we do that, just a quick shout out to you. Thank you so much for joining this stream. Seriously, I love you guys so much. These streams are not possible without you. So thank you so much for coming out here, listening to what I got to say about the news and crypto and China, whatever else. I really appreciate it. And of course, thank you for still being here in the crypto winter, maybe the early stages of spring with a big storm right now. We're still here. We're still talking crypto. We're still invested. We're still loving it, guys. Okay. All right, let's find some questions here. Crypto Ninja, should I buy more stuff? The question of the day. Look, as I discussed earlier in the stream, when historically Bitcoin, not financial advice, can't tell you what to buy, when historically Bitcoin has hit these strong oversold readings, it has been a buy signal. It has been a time when it has been not a bad idea to add some Bitcoin to your stack. Now, in terms of altcoins, you got to remember with the altcoin game, we've seen 1,000 new altcoins created this year. 900 have already gone to zero. 90 are on their way to zero. And 10 might go on to do something really big. Some of the old school altcoins that are still around, Chainlink, stuff like that, they got some nice discounts out there on things that do have good potential in the next cycle. So, if you are shopping today, just keep in mind, we could still see more fear in the markets in the days to come. So, one way that I mitigate this in my portfolio personally, I just add a little bit here and there. I don't go all in. I got all my money now today, I put all the money in. Then tomorrow it goes lower, or tomorrow it goes up. Maybe time it well. But I find I reduce a lot of stress by making smaller, regular interval purchases. That's me personally. Okay, where are we at? Ben Johnson. Ben, I saw your super chat earlier. Thanks for that. I think it was yours anyway. Doesn't Zen remind you of early Bitcoin? I have literally never heard of Zen, or have I? I don't think so. Maybe I have. I don't think I've looked at it before, though, to be honest. So I don't know anything about Zen, man. But, or Zen. The Zen is with X. XN. Anyway, besides the point, there are so many altcoins out here, man. There's so many altcoins out here, and it's so hard to actually keep track of, well, most of them, to be honest. And, I know when people, oh, Lark, how have you not talked about this coin? I don't know how I keep up with the coins that I do talk about. And here's the thing I always like to say is that just because I'm not talking about your coin, just because I'm not invested in your coin, doesn't mean that your coin's not good. It might be. I have no idea. I haven't looked at it. But there's a million ways to make money investing in this market. And the way I do it is not the way you have to do it. The way you do it's not the way I have to do it, or anyone else has to do it. You find your niche, you find what works for you, and you push that. When you find what works for you, what you find makes money for you in the market, you double down on that. AJ DIY Network. Keep up the great work, Lark. Love your channel. Thanks for the super chat, man. Appreciate it. Appreciate the words. Thank you very much. Shout out from Brazil, Tiago. What's up, man? Okay. Here we go. Mr. Harry Lazani was saying, we talked about Zen a few times in the newsletter. There we go. There we go. Harry Potter Inu. Oh my gosh, this coin. I'll get to the next question, but I just want to make a comment on this, man. Harry Potter Obama Sonic Inu coin. $170 million market cap, still pumping, says Dominic. What are you guys doing? What are you guys doing? I just don't get it sometimes. I mid-curve significantly meme coins. I am definitely the guy in the middle just going, what are you guys doing? Whereas you got the apes on the left going like, aha, meme. The guys on the right going, meme is culture, pump. I don't know. I don't get it, man. Why would you buy Harry Potter Obama Sonic Inu coin? Godspeed, my friends. I hope you go to Valhalla. May your bags go to Valhalla. Not you, of course. Your bags go to Valhalla, and you get fantastically rich off of investing in. I don't even know what that is. Honestly, what? Let's go on to the next one. Ay. Will Shiba Inu ever rise to the top, says Terrakill? I guess, well, we had Shiba Inu's Shibarium come out this week. They had, $2 million worth of Ethereum, get locked up in their bridge contracts somehow. I'm not exactly sure what happened there. Will Shiba Inu ever rise to the top? Look, meme coins are a funny one. And I know that the Shiba team has been trying all these different things to try to implement more use cases and thus more demand for the SHIB token. So, hats off to them for being a meme coin community who actually does something. I'll give them that. But hey, as long as dogs remain popular, I would say Dogecoin and Shiba will probably do something next cycle. But if Elon puts Dogecoin into the X app, I would say Dogecoin will probably outperform Shiba this cycle. But then you'll probably have people hopping on to the, well, look, Dogecoin's going up, so Shiba's going to go up too. It's meme coins, man. Meme coins. Ay. Anyway. Here we go. Let me see. AJ DIY Network. Not big on meme coins, but I do own a couple. Yeah, I understand people who play meme coins. Like, it's not my game. Not my game, right? I understand those who do play that game. I understand those who want to participate in the meme culture. Meme coins are fun. I actually really like meme coins. I just don't like investing in them. It may sound like a contradiction, but I love that Dogecoin exists. I love the Shiba Inu. I love that people made a bunch of money off Pepe, man. That's great. That's hilarious. I love it. I love that it brings people into crypto. I love that it gets people involved in the cryptocurrency industry. Like, why would you hate on meme coins, man? I just don't invest in them. That's the difference, because I mid-curve it, apparently. Anyway, where are we at next? Chaos Nate, do you think AVAX will do good in the next bull run? If so, how much better? Look, I don't have a price prediction for you at this time, but one thing I can say is that the Avalanche team man, those are some hardworking guys. Look at the amount of utility they've brought in over the last, what's it been, year and a half or whatever of the bear market. They've been working so hard. They brought out subnets. They brought all these massive partnerships. I've got a big bag of AVAX, by the way, just to be clear. I got a big bag of AVAX, and I'm waiting for much higher prices. I think they've got a great potential, honestly, to do big things. And yeah, I don't know if that means they're going to get to a new all-time high next cycle or not. I'd say even return to the previous high would be pretty gosh darn good. That'd be 10x from here or something like that. Sweet. Sweet. That's great. I'm all about that, man. All about that. Yeah, but I don't have a particular price prediction for AVAX, but I am definitely bullish on AVAX as a coin. I feel like it's got a lot of stuff going for it. We talked about positive user metrics and all that stuff that's have happened this year and all the technology and stuff being built. So I remain bullish on AVAX more broadly. Well, here's a great question from Tara Kill. Lark, do you think that the miners will be able to survive the Bitcoin halving? They always do, but not all of them. That is the trick. And of course, you also then have to factor in their revenues basically get cut in half in a day. So it really comes down to how competitive are those Bitcoin miners right now? See, there's going to be an average price, and I don't know what the current average price it costs to make a Bitcoin is. I haven't looked at that information recently. But let's just say right now it's $20,000. It costs $20,000 for your average miner to produce a Bitcoin. That means that a lot of miners will go out of business. But it's usually smaller mining operations, home miners, stuff like this that get hit the most, because the really big mining firms, they're able to get such cheap energy. They're able to get at the front of the line for massive orders for new mining hardware. They tend to do okay. Like I saw the other day, one of the publicly traded mining companies, I swear it was them. Don't quote me on this, but I think they mentioned they were mining Bitcoin for like $8,000 a coin. So even if the price of Bitcoin went down to $20,000, those guys would still be profitable. They're super profitable right now, but they'd still be profitable even after the Bitcoin halving. So there's always going to be profitable miners. The mining industry is very adaptable. It's very liquid and moves very fast. So Bitcoin's going to be fine. Miners will be fine. There's always these ups and downs with some companies going bust, some other companies taking the market share. They move when they need to. They find cheap power. They make it work and they make money. So as long as they're making money, which they will, they'll find a way. They'll be fine. Okay, last question for today. Edgar Jacinix. So that's a good question, actually, too. Lark, why do all the cryptos crash together at the same time? It's a great question. Basically, the whole industry, as you probably guys have noticed, largely moves lockstep together. Now, every once in a while, you're going to have some coins that just do 100% gains while everything else stays stagnant, or something drops 100% while everything else remains stagnant. Basically, when you have Bitcoin and Ethereum take big hits, everything else follows, and usually further than it does. And this is largely because of trading pairs and stuff in these different assets. A lot of trading pairs on chain and on exchange are traded versus Bitcoin and versus Ethereum. So when Bitcoin and ETH go down, the altcoins go right down along with it because the value of them goes downward. We track the value of these versus those assets too. Plus, people tend to flee from risk earlier as well, and altcoins are riskier. So if people see Bitcoin and Ethereum going down, they rush even quicker to get out of their altcoin positions. A lot of altcoin positions for a lot of people are rather speculative, whereas Bitcoin and Ethereum positions tend to be more long-term kind of stuff. So there's a lot of different reasons why they move together, but they do. They do. And it's important to keep that in mind. They have to move faster. If Bitcoin goes down 5%, your altcoin might go down 15 or 20%, which is brutal, but it's the reality of crypto. Because people run out of risk faster and they stay in less risky things longer. Bitcoin's less risky. Altcoins, Harry Potter, Obama, Sonic, Inu coin is like the far end of the risk spectrum. And even if it's up today, I don't know if it's up or down today with the rest of the market going on, but those are the kind of coins that tend to take the biggest hits because they're the farthest end of the risk spectrum. Anyway, I hope that answers the question. Guys, thank you so much for joining this broadcast. I absolutely appreciate everyone's time. Again, thank you very much for joining this conversation. And hey, I know it's been crazy out there, but it's crypto, man. We're going to be okay. All right. See you next time.